Welcome to The Curve Weekly, the podcast that keeps you up to date with all of the money, business and stock market tea.
Brought to you by the Curve's research team. It's the latest insights on what's happening in the stock market, companies, other money-related news so that you can stay educated and ahead of the curve.
You can thank us later for sounding smarter than those finance bros at your next dinner party. Hello, everyone. I don't know whether to laugh or cry right now. Maybe just deep breaths is good. I am obviously missing a very important someone, and she is fine. Don't worry. Sorry if anyone's worried. She is fine. She's just feeling a bit unwell. So I was like, you know what? I've got it. I will jump in and record this podcast. Do not worry. I will take one for the team and I will solo this podcast. Alex Cooper does it. I can do it. It's fine. It's fine. Let's just say this is the third recording of this podcast. Honestly, the first time around recorded the whole podcast and then realized the mic wasn't plugged in, which was great. So it was just no sound. Second time around, I didn't hit record. So let's hope this one works, because I don't think I have a fourth one in me. I don't think you want to hear the fourth version either. So let's hope. And I'm sorry, I just keep checking. I am absolutely paranoid now. Anyway, yes, my darling Sophie is not here, and obviously you can see she is instrumental to the Curve and this podcast, because it is the third time I'm recording this. Anyway, she will be back next week. Thank goodness. And I won't have to do a podcast 3 times. And actually, I have got a little someone helping me. Well, she's not really helping me. She's asleep. Miso is not a very good co-host, but my little friend is keeping me company. So you might hear some little barks throughout this podcast. Anyway, what has been happening in the stock market, finance and investing world? Lots. Firstly, we have had one of the biggest weddings in the world, really. One of the most expensive. One of the ones that's probably got the most attention as well. And it was the wedding between Jeff Bezos, one of the richest men in the world, and Lauren Sanchez. And let's just put it in perspective. Jeff Bezos is worth $250 billion. That's massive. And he obviously got his wealth because he founded Amazon, one of the biggest companies in the world. And he recently got married, and this is his second marriage, and he spent $50 million on that wedding. $6 million of that was on private jet security. So not just security, but private jet security. $1.8 million was on 150 wait staff. So 150 people. Usually that's the size of a big wedding anyway, let alone that just being the wait staff. $1.6 million on roses. So just imagine, roses die. I'm like, I don't get it. $1.6 million on flowers. And $2 million on wine, which, wow, that must be a lot of some pretty prestigious vintages, I can imagine, or else a really, really boozy party and lots of guests getting absolutely obliterated. But I just wanted to put this in perspective. $50 million, is a shoot. It's a shit ton of money. And I was like, I wonder, when someone's worth $250 billion, what is 50 million to them? You know? And so I did some calculations, love doing calculations. And if you earn $50,000 or £50,000, it'd be like you spending $10 on your wedding. Absolutely wild. Like, that is what 50 million is to Jeff Bezos. So yeah, he spent $20. What is equivalent to $20 to us on his wedding. But the big question is, did he sign a prenup? And why is this becoming a question? Well, not only because he's the richest man in the world, but because his previous marriage, he didn't. So in his previous marriage to Mackenzie Scott, he was married to her for 25 years and they had a few kids. And anyway, they didn't have a prenup. Amazon wasn't really, was kind of like a blip on the radar at that point. And now it is one of the biggest companies in the world. So there was no prenup in place. I guess you wouldn't really expect your potential partner to create one of the most valuable companies in the world. But anyway, he did. So she was left with a pretty big payout, and she got about $35 billion, which was about 25% of their shared stake in Amazon. This catapulted her, right, to be like one of the most richest women in the world. And people are like, she did nothing and she just got this payout. And I completely disagree with that. And I think for someone to achieve such wealth like Jeff Bezos has to have an incredible support network around him, from family to colleagues to, to everyone, particularly an amazing supportive partner that, might look after the children so that they can go to work. Like all of that kind of stuff helps fuel someone to create such wealth like that. So to say that she did nothing and got that huge payout, I think is, in my opinion, I hate narratives like that. Like when people talk about what people got in divorces and all of that for doing absolutely nothing. I think it definitely takes a team to create such wealth. Anyway, I could harp on about that forever. But anyway, one thing I wanted to highlight was with that $35 billion, she has given away, so Mackenzie Scott has given away over half of that to charities and foundations. So yes, she was catapulted to being one of the most wealthy women in the world, but she's already given over half of that away. And I think this just goes to show that women invest with a very philanthropic social lens. So we don't want to see, and I'm making a generalization here, some women don't, but that's fine. And also some men do. It's just highlighting that women invest with a philanthropic and social lens, which is really important. Particularly, we've got this global, gigantic wealth transfer happening, about to happen. And this is when, the boomers who have accumulated so much wealth over the years, and they're a large percentage of the global population now, start to pass away and pass down those assets and that wealth. And because women outlive men, that is going to be transferred into the hands of women and then transferred down to generation to generation. Now, the reason I'm highlighting this is that it's also the reason we need to get more money into the hands of women, because we invest with a much more holistic view. We don't just want a financial return. We want to make sure that money is actually either being good for the planet, good for society, good for our community. Money is power, right? Money is you making a decision of the world you want to see in the future. And so the more money that we can get in the hands of women, the more of a world that we can create for us and that we are really, really proud of. I am so passionate about this, and I think with everything going on in the world right now, it's so incredibly important to realize that your money is a voting power. It is a way that you can support companies and countries and organizations and industries that you want to see grow and prosper and be part of our future. And so this actually reminds me, last night I went to a alumni event for my school. They have them once a year in London, and I went along and I was talking about, I got asked to speak, I felt very honored and privileged, and because I was not a very good student. I definitely wasn't hugely sporty. I wasn't hugely academic. I was just your kind of average student, I guess, that probably just annoyed the teachers a touch too much. Just tried to get away with stuff. Anyway, I was talking about the curve and the importance of investing, and I started feeling super, super passionate about we need to get more women educated. We need to, in terms of financial literacy, we need to get more money in the hands of women. And I was about to I honestly felt this intense, not rage, but frustration with the world. And anyway, I could see myself getting all worked up, and I was just whew, deep breaths. Anyway, it was a really great event, and I think it just highlighted the importance of, we get emails all the time, right? And messages from women saying, I wish I knew this stuff younger or earlier. I wish I want to learn this so that my daughters know this stuff and aren't in the same position. And so I think it's just really, really important. Obviously, when you're listening, you are already taking that action. But if there's anyone else that you think will benefit from this podcast, please, please, please let them know, because we really need to change the world right now. And we can do it. We can do it one person at a time. Like that saying, it's only one straw, said 2 billion people. So we can do it. Anyway, wow, I really digressed then. Anyway, it's not just Soph and I that go on tangents. It's definitely me. But anyway, back to Jeff Bezos and his wedding. There is speculation that, what is in the prenup with Lauren Sanchez, because they didn't get one in the previous marriage, and now surely he's not making the same mistake again. And there is speculation that nothing's been disclosed, right? It's all speculation, but there is speculation that Lauren Sanchez had to sign a prenup, but it had a signing bonus in it, which is kind of like dangling the carrot. It's like, hey, if you sign this, I'll give you like 50,000. I have no idea. I'm just pulling numbers out of my ass, but it's just to be like, to help them, encourage them to sign it. So therefore, you pay away a little bit to protect you, kind of the bigger pie. But, she was carrying a $300,000 Hermes bag. I think she's doing fine at her wedding, that is. Also, another thing about this wedding is that not long after, it was disclosed that Jeff Bezos had sold about 3 million shares in Amazon. So that is about $700 million in value. So I think he is on his way to have a very bougie honeymoon with all that money. Anyway, enough about him. We have an exciting IPO coming. Figma, it's a competitor to Adobe and Canva, and it has filed for an IPO. And now let me break that down. So when a company is IPOing stands for initial public offering. And that means when a company becomes public for the first time. So it means that you and I can invest in it. It means that its financials are on show for everybody. And Figma has filed for IPO, meaning that a lot of the time it's just speculation when companies will actually IPO. But when they file, they're kind of registering with the financial regulator. So they're saying, here are our financials and we're ready to go. So the fact that it's done that means that it's imminent. It's going to happen very, very shortly. No date yet, but it was interesting when it filed its financial results because, like I said, this is a competitor to Adobe and Canva. Canva is a private company, so we have limited knowledge on how it's doing, what its revenue is, what its profit is. But Adobe is public. And Adobe hasn't really had any competitors listed on a stock exchange that we can compare it to, right? Whereas now it does. And so when Figma brought out its financial results to the public last week, Adobe's share price fell. Now, that to me says there's something in these reports or in these numbers that make Figma look better than Adobe. And so that's why investors are selling Adobe. One of those things is that its revenue is growing at 50%, which is massive, which means that it must be taking share off someone. And because we don't have Canva's results, we can only assume that it's Adobe. The other thing in there is that investors found pretty interesting was just like how much it's infiltrated these top tier companies. So Figma is now used by a whopping 95% of Fortune 500 companies. And by that, I mean that is the top 500 private and public companies. You know how we talk about the S&P 500, which is the top 500 public companies. The Fortune 500 is the top 500 private and public companies. So anyway, it's done phenomenally well. And I think it's done a lot better than people expected. And that, to me, as an investor, would say that, okay, it must be taking share off Adobe. So therefore, that's why Adobe's share price has fallen. Also, Adobe tried to buy Figma not that long ago, and it went to buy it for $20 billion, and it nearly got through. And then the regulator, or like the competition watchdog, was like, actually, if you guys combine, that's two big players in the kind of design software space. We're not going to allow it to happen. The deal fell over. So yeah, it's going to be an interesting IPO because you've got Canva in the sidelines going, if Figma does really well, we'll be next off the rank. If Figma doesn't do very well, we'll probably chill out on our IPO plans as well. But Canva is coming, and that'll be a lot more exciting, and we'll definitely do a deep dive on that when it does come. Nothing's been set in stone yet. It's all just rumors. But one thing I wanted to highlight with this as well is this is an interesting time, right? Because not that long ago, we were talking about how the stock market was falling. Things were feeling very, very uncertain. We had tariffs. We had global growth slowing down. We had Trump in power. We still do. Whereas now, the S&P 500, so the US stock market, has hit record highs. We have reached levels we had never seen before with the S&P 500. So yes, the S&P 500 goes up and down and up and down and up and down, but over the long term, it goes up and to the right. And now we saw a bit of a bigger than we usually do fall, a fall of the stock market in April. That has rebounded really strongly and has, shot past any previous level. So things are looking really, really optimistic in the stock market right now. And that is why we're seeing companies like Figma IPO, because you want to IPO when everyone's feeling euphoric and everyone's feeling excited and the market's doing really well. You don't want to IPO when things are falling, because no doubt if you IPO and the market falls, your share price is going to fall. So this is why when things are going really well in the stock market, it leads to this euphoria. You see companies IPOing, people get excited, and then this is what we kind of call these bubbles, right? And then these bubbles burst and then everyone's like, oh my gosh, so yeah, that's the nature of investing. But over the long term, stock markets always recover. And this is what we've seen. We have seen, it hasn't even been the long term. I remember we did a workshop, everyone was like a bit concerned, which is fair. It's money. It's, the stock market. And we were just like, you know what? Sit back, relax. What is that? Keep calm and carry on, because markets always recover, and they have, and they've recovered very, very strongly. Anyway, in terms of getting access to IPOs, Figma or any others, it's actually really hard, and it's frustrating because we want to get access to these exciting companies, right? We want to invest in them. We want to invest in them when they're private and then when they become public. But it is becoming easier to invest in private companies. There's platforms where you can do it, but it is still quite difficult. It's much more difficult than in public companies where you just go on and you can, buy shares through Sharesies or Trading 212 or any platform that you use, any trading platform. But also, if you're investing in companies, you should be investing in ones that you think will grow over the long term. So you shouldn't be worried about trying to get that, what might be like a really strong day of performance the first day that it IPOs or anything like that. I can tell you, most IPOs, there is better opportunities to buy them down the track, if that makes sense. So yes, their share price might do really well because they're the shiny new toy on the stock exchange, but there's always opportunities around the corner. And by that, I mean, sometimes the share price falls and you get it at a much cheaper price. Anyway, if you do believe in the company long-term, you shouldn't be worried about those short-term movements. You can buy on day one when it becomes a public company and hold it for the long term. In other news, we've got a new tax year in Australia, and this is important because their superannuation percentage is increasing. And by superannuation, I mean their pension or their KiwiSaver in New Zealand, and it is increasing from 11.5% to 12%, which is massive. This is one of the highest contributions globally in terms of percent that they contribute to their retirement fund. And Australia has got one of the best pension superannuation schemes in the world. It's built up a pool of $4 trillion, which is 100% of the country's GDP. And by GDP, I mean gross domestic product. And that's just a figure or a metric that is used to describe the size of a country. So the fact that Australia has its retirement funds is 100% of its GDP is massive at $4 trillion. Whereas if we compare that to New Zealand, we have 120 billion, which is 30% of our GDP. So we've only got a very small percentage, or much smaller percentage, in retirement funds or in the kind of superannuation pool than Australia. But yeah, 12% is world class. And also it's the employer that contributes that, right? In Australia, not employee and employer. So yeah, I mean, I remember when I was living in Sydney, I was there for 3 years. I had more in my superannuation or my pension in 3 years than I did in 7 years working in New Zealand. So you can kind of see they've also increased their minimum wage in Australia starting this financial year. So this is one of the highest minimum wages in the world. And you can see why there's such a brain drain from New Zealand to Australia, right? Like when you're getting 4 years, I was 4 years ahead in terms of my retirement funds essentially. Or you're getting a higher minimum wage. And you can see why it is an attractive place to go and earn and live. In other news, Tesla, honestly, I'm kind of sick of talking about Tesla, but it does get a lot of attention, and fair enough. It's got a very eccentric, outspoken CEO, but sales have fallen to their lowest level in 3 years. So people, and in people I mean investors, are pissed. Remember, Elon Musk, he's the CEO of Tesla, but he's also the CEO of SpaceX, his rocket company, X, which was Twitter. And he has recently, not anymore, but been in with the Trump administration and government. Those 4 roles are so time consuming. And then when you see one, Tesla, where sales have fallen to a 3-year low, fair enough, investors are pissed. They're like, hey, what have you been doing? Like, you're obviously taking your eye off the ball. You're trying to juggle too many things. And so yeah, investors are annoyed. The share price has fallen. I mean, he's not in with Trump anymore. He has come out and said to investors, look, I realize, I'm going to spend more time on Tesla, but I don't see any sign of these sales turning around yet. And as a Tesla shareholder and a Tesla investor, I am getting increasingly worried that his buddy-buddiness with Donald Trump, and I know that's broken down now, but the fact that he was, I think there is a brand damage issue at Tesla. And I know it's the kind of the poster child company for decarbonization and reducing emissions, and they've been able to make electric vehicles profitably and all of that. And there's so many out there, and like it's a massive company, right? And I get increasingly worried that there is brand damage to the Tesla brand, and that is super hard to come back from. Even today, people are like, Nike, oh no, they use child labor, or they use, and it's like they tried to shake that scandal so long ago, yet it still haunts them. So yeah, brand damage is pretty bad for a company and pretty hard to, I guess, come back from. It's like a bad reputation, right? It's really, really hard. And with sales figures like this that keep coming out, share price keep falling. Oh, I don't know what to do. It's tough. But yeah. 2 more quick things. Warren Buffett has just announced that he has donated $6 billion to a bunch of foundations and charities. I love Warren Buffett. He's so great. It's always been a thing that he's said that for all his fortunes that he's built up in his investment company, Berkshire Hathaway, he is not going to be giving that to his children. He's not going to be passing it off to them, which I kind of admire. Like, you've got one of the wealthiest men in the world who is like, no, my children are going to work and make their own wealth and not just be given the fruits of my labor. Anyway, so he's donated a whole lot of money, billions and billions of dollars. He's donated about $60 billion over the last 20 years to a whole lot of foundations. And the main one is the Bill and Melinda Gates Foundation, which tackles things like global health, poverty, education. But in particular, Warren Buffett has supported a lot of foundations in the space of women's rights and fertility and all of that. So great to see that, even though I said that women invest in this way, that there are some really, really great men, very powerful, wealthy men that also invest in this way and support charities and foundations and do good with their money. Lastly is Glastonbury. So another reason I want to cry is that I didn't get a ticket to Glastonbury. I thought I had one and then I didn't. Anyway, I am very gutted about not going to Glastonbury. I went last year and it was so fun. And anyway, the numbers have come out in terms of how much the festival makes, how many people attended. So winding back the clock, Glastonbury started in 1970, 55 years ago, and it had 1,500 people attend, which back then is quite a lot. Anyway, everyone paid £1. They paid £1 to get into Glastonbury, and they got a pint of milk with that £1, which is very cute. And this year, over 200,000 people attended, and they paid about £400 a ticket, which is a lot of money. And anyway, it is expected that the festival made about £80 million this year. And it's been quite contentious because there is this, I guess, charitable side to Glastonbury. And, you know, they're very conscious of their impact on their surroundings in terms of the community, the land and all of that. But it still made a profit of about £5 million. So it is still, quote unquote, a business. Anyway, there's been a few headliners that have been a bit pissy because I don't think they pay the artists very much, and they're like, you know what, you're making £5 million in profit, you can afford to pay the artists. But yeah, anyway, I guess there's a status thing of playing at Glastonbury as well, which is what helps draw in these top artists rather than just the monetary value. Like I think I remember Taylor Swift, she was made billions of dollars from her tour, right? But or otherwise it's like you could make, I think it was like 200 grand from Glastonbury. That's why everyone's asked why she's never done it. But anyway, I didn't contribute to any of these figures because I didn't go. But hopefully we'll be there next year. Oh no, it's not on next year. Anyway, hopefully the year after. But anyway, I'm absolutely exhausted. This is now the third time doing this podcast. I hope it was worth it. I hope you enjoyed it. And don't worry, Soph will be back next week. You'll have both of our voices in your ears. And yeah, I hope everyone has a great week. See you next week.
Thank you so much for listening to The Curve Weekly. Make sure you hit the subscribe button to stay up to date with all the money, biz and stock market news. And if you like what you heard, we would love a review. Thank you.
Yes, we would love a review. But if you did hate it, please, don't leave one if you hate it. No, but in all seriousness, could you please leave a review? Because it really helps other people find our cute little podcast.
And we hope you have a good week and see you next Monday.
Bye.
Bye. Sweet.
Nice.
Yeah. See you next Tuesday. Lol. See you next Tuesday. I mean Monday.
No, actually, though. New episodes out every Tuesday. Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.